In many ways, when we talk about sustainable finance, we often talk about deals of millions or billions or trillions. The latest estimate is there are $386 trillion of assets in the global financial system. That's our target range. All those assets need to be aligned with the transition we've heard about so much about. Not all of it needs to be in green assets, in renewables, but all of it needs to be aligned. So in the next few minutes with this panel, we'd really like to go through how we can align that capital. There's a lot of capital there. How do we get it moving into the right place? And what are those systemic innovations we're going to need to see in the coming years to make that happen? So to introduce the panel, on my immediate right, Teresa O'Flynn, who's the global head of BlackRock Real Assets and Sustainable Investing, who's based here in Dublin. We then have Pierre Ducret. Pierre has already been mentioned. He's a board member of the Finance for Tomorrow initiative out of Paris, the new co-chair of the FTSE network globally, and also chairman of the Institute for Climate Economics, again in Paris. Welcome, Pierre. Then Pierre Rousseau. So we have two Pierres together. I think they're both from France, but luckily Pierre Rousseau is actually from Hong Kong. So he's going to bring, I think, a sense of that other world, the majority world, which we need to think about when we think about sustainable finance. Pierre Rousseau is the strategic advisor, senior strategic advisor for sustainable business at BNP Paribas. Then Antoni Ballabriga, who has two hats. He's not only the chairman of the European Banking Federation's working group on sustainable finance, so looking across the continent, but also global head of sustainable business at BBVA in Madrid. And finally, Emil Stigsgaard, who is the co-founder of a new initiative, Matter, based in Copenhagen, working on pensions and how we mobilize individual actors. So that's the brains trust we have on the panel. And I'd like to turn to you, Teresa, first. We have this special report. All of us have read it. The minister has read it. We've got to basically halve emissions by 45% from 2010 levels by 2030. We're going to keep warming to 1.5. That's pretty tough. How are we going to do it? How are the sort of the initiatives you have in BlackRock, how are you going to align your business with that very ambitious target?
That's a good question. And firstly, I might just say, just for context, as you mentioned, I sit in BlackRock Real Assets, and basically Real Assets is our private level investing in real estate and infrastructure. So the perspective that I share is very much that of the institutional investor, pension funds and insurance companies. And you know, how are we going to finance the trillions? I think it's critical that we understand the needs of the institutional investor. And really because institutional capital is the lowest, the lowest cost capital there is out there. It's not necessarily the right type of capital for early stage development risk or technology risk, but it is absolutely the right type of capital that's, that should be focused on project level investing. So what we've been doing at BlackRock over the last 8 years is we've built up what is one of the largest private level investing vehicles focused on the renewable energy market. And as we all know, per the IPCC report, we need the level of renewables to increase from 20% today to 85%. And I suppose the perspective I would share, because I think this is important for people to understand why institutional investors like this asset class, is its lack of correlation to other parts of their portfolio. What do I mean by that? If we look at wind and solar projects, which today account for about 30% of global infrastructure investing, the cash flows are driven by the sun shining or the wind blowing, not what is happening in the stock markets. So actually, in order to finance the trillions that's required in order to decarbonize our economy, you need to understand what edge this asset class has over others, and the lack of correlation is a big, big one. And then obviously, ultimately understanding the risk profile and the needs of the institutional investor. The other bit I would like to mention really quickly, and we're very focused on this in BlackRock, we can't ignore the built environment. Buildings account for about 20 to 30% of global emissions. In a European context, 60% of the buildings that we have today will be here in 2050. So I think we need to focus on two things. One is making sure that the new buildings that we're building are energy efficient, and that's something we're very focused on in terms of our own real estate portfolio. Probably the more difficult piece, and there's a lot of innovators in the room here, we also need to think about how we can green up the buildings that are existing stock. More difficult to do because retrofitting sometimes can be capital intensive, and it may be difficult for investors like ourselves to justify the return if it doesn't make economic sense. And then I suppose the final piece I would mention is do not want to ignore emerging markets. Again, per the IPCC report, emerging markets are going to account for 2/3 of global emissions. And something that we've been very focused on in BlackRock, and we recently announced a climate finance partnership with the governments of France and Germany and some foundations, is how we can attract institutional investors into emerging markets. They like renewable energy, as I mentioned, in developed markets, but making that leap into emerging markets presents new risk, particularly from a country and regulatory perspective. So my final comment would be just understanding the needs of institutional investors, I think, is critical to making the trillions flow, because we need the source of capital in order to finance the transition.
And I think, obviously, that focus on real estate, the minister touched on that, the retrofit challenge, which is going to require probably new relationships, particularly in banks and their clients in terms of mortgages and commercial real estate and so on. I'm sure it's something that we're going to pick up next. Pierre, I'm going to come to you, newly appointed co-chair of the financial centres, coming out of Paris, one of the sort of the leading players in this. Obviously, you gave us the Paris Agreement, so thanks for that. Why, again, this financial centre dimension? I mean, why is that so important? What's the sort of the potential you see here?
Thank you, Nick. As you said in your opening speech, the financial centres have a very important role to play, because, in fact, they can bear the kind of responsibility on the agenda of the financial industry toward a low-carbon world. They are concrete, located in cities. They are cross-cutting. It means that they are gathering all the different jobs of the finance industry, insurers, as you quoted them, insurers, asset managers, asset owners, banks, services such as exchanges, and so on. And so they can organize the cooperation and give information on the way they are transforming, in fact, the whole industry toward a new pattern. What can we expect? And that's exactly what I see in Paris, where our initiative, Finance for Tomorrow, has created a real new dynamic into the industry. And I'm very glad that you mentioned it, to see that, for example, New York, which was surprisingly far from being organized as a financial center, is making steps toward this direction, thanks to Bloomberg and so on. The second thing I would like to say is that the fact that we have this code sharing by a European and a Chinese from Shanghai is very promising. The FC4S network is a worldwide network, incorporating, of course, emerging countries which have a regional ambition also, such as Casablanca. And, you know, this code sharing with European and Chinese is very important, because, as many of you know, we have two main patterns in the world now on how to green the financial system. A top-down pattern within the Chinese one, and a bottom-up one, which is almost bottom-up one, even if we'll come back on this after that later. Nick, I know even if we have now initiatives and, from the regulators also in the OECD world, but it's mainly a bottom-up pattern. And the discussion and compromise between these two patterns is very important. What can be expected from this network, FC4S? I think that what can be expected is, first, a lot of information. which is very important because we have to track the process of winning the finance. And it's, it's very important to deliver information. We can expect also a lot of cooperation. Finance is a very competitive job. Each financial job is very competitive, but there is room for cooperation, especially as regards the green finance. And I think that cooperation can be used to develop new initiatives toward education, for example, which is very important, research, but also the building of new standards and norms. And if we succeed in building this network, it could become something like, I said this morning in a meeting that I was hesitating with the word authority, but maybe something like that, something like a source of norms and standards on a worldwide scale.
No, very interesting. I think it's very important, the point you made about China's role, because I think one of the interesting things about sustainable finance is probably, for the first time ever, a major shift in the financial system in terms of sustainable finance is being shaped without the active involvement of the US government. And it's largely been shaped by now the European Union and by China. And so we move from the Liffey to the Pearl River Delta. We move to Hong Kong, where Pierre Rousseau, I don't believe you were born there, perhaps, but almost, fantastic. So, Pierre, you're, again, a bit like Teresa, in a big international multi-hub financial institution. Lots of things happening in BAP. We've got these big targets now. How are we going to hit them?
So first of all, I think I would like to enlarge the scope. I think when the majority of the time when I hear about sustainability or green, people talk to me about green bonds. And I think sustainability is about all the system that we have in finance, and it's about all the system that will switch. Why it will switch? Because everything depends on two things: digital and sustainability will be the driver of the change. And we will have to follow those changes. So the people who believe that we will do finance that's the way we do today, I think they're completely wrong. And we are going to the change, and I will give you some examples. First of all, because we have long-term transaction here. When we talk about climate change, when we talk about agriculture, we talk about long-term investment. So it's quite clear it's not the bank who will finance that. So we'll have to accelerate the process of capital markets. So capital markets will evolve. But capital markets will not be only green bonds, but it will be also green securitization. And I know when I start to talk about securitization, you have already all the people who say, oh, la, 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 we're coming back to 2008, it's a crisis, it's a big problem. No, but if we do it for the right purpose, it's probably the right solution. And later on, I will give you an example of use of securitization. And green securitization has been one of the key things that we are thinking with Mahjong in China and in the UK. It's one of the main topics. But it's not only about capital markets. It's also about leasing. Leasing is a very marginalized business in overall. But leasing can be very interesting because leasing will be very important for circular economy. And circular economy is the economy of tomorrow, is the economy of the waste. So batteries, solar panel, if we can start to have the leasing. So what about deploying the leasing? And when we talk about that, why not to extend to the personal finance? Personal finance is something very important because every single human will probably, or household will start to have this electric car, want a solar panel, wants to have connected objects, etc. So how do we finance? So we need to revisit probably also the personal finance. Personal finance in terms of risk is probably very interesting for a bank because it's a way to spread probably the credit risk amongst millions of people. Trade finance has been something also very interesting. The bank cannot do long-term, but they can do short-term. Trade finance is probably something that we can revisit by creating bonus and malus. When you have good traceability, you have bonus on the financing. When you have a bad traceability of the product that you do in trade finance, you create a malus. So you can see that you can have a lot of scope that we can enlarge, and what is important here is that, first of all, to make sure that we find also solution and investment solution, not only for I will say professional investors, but we start to go to the mass, all the mass of the people. So how do we want to engage and be massive if we don't engage every single citizen in his investment program? So we need to create products. We need to create products for the single individual. We need to involve the individual in the leasing, in the consumer finance, and this will require probably a certain number of, I will say, obstacles or constraints, or I don't know if it's the time to talk about the constraints or what are the objection. But in 2 minutes, the first objection is the bank itself. Sustainability is completely the opposite in DNA of what the bank is thinking. First of all, what? In the bank, we are thinking with historical data. If you have a head of risk, the first thing you will take is to take historical data. Today, we had people explaining us that we need to think forward and we need to think with scenario. Or are we matching that? Or are we starting to create? If we want to create product, we will have to compose with the two. What about also what is related to the feasibility to use derivative and securitization, which are all seen as product? And I'm coming from global market, and I've been directing all the bad boys that has been qualified and people who did all these transactions in the past. But I can tell you that today they are the products to do with a good purpose and the right purpose. They will be the products we will solve. But for that, we need to have the regulators who allow us to do that. Today, securitization is seen as the devil by the European authorities. So it's probably time that we open it. This is happening in China. China will open its market for a green securitization massively. US is already the case, so it's probably the time to do it also here in Europe, and to allow long-term investors, which are sovereign funds, which are long-term individual insurance company, to invest in such product. And this will be also, if we create such product, a way for them to diversify their risk.
Great. So from one bank saying, actually, we've got to rethink the way banks thinks about things.
All the banks will think about it.
To another bank, all of them. So actually, and rethink banking as a whole. So Tony, actually, you have been issuing green bonds at BBVA. You've been doing a lot of things, I think, thinking about the real estate side of things, which Teresa was talking about. Again, these are big targets we have. I mean, your sense of how we're going to mobilize the capital?
Well, thanks for the invitation, and congrats for the initiative to create the network. First of all, I think it's a great opportunity to put cities in the middle, the center of as another additional pillar to build a robust and sustainable financial system. So I will start before looking at the European banks. What we are doing as European banks. Then I will focus on BBVA. But I think that the European banks, well, we play a critical role. At the end of the day, we are financing 70% of the economy, so we must be a key player on this challenge, no? And in my opinion, I think the European banks we are moving forward properly and quick. I would say there are five elements that give an idea of what the European banks are doing. We are participating in the setting of standards for the market, so that helps a lot, like green loan principles, other ones, social bond principles, green bond principles. This is a key topic. Also, we are participating in developing new methodologies because we have to learn how to manage all these challenges. So there are a few banks participating on the CFD pilot project and also additional methodologies. The third idea is that European banks are providing more and more innovations on customer solutions and client solutions, in line of what Pierre said. No, not everything is green bonds. We have a lot of different options that we can comment later. And the fourth idea is that European banks are engaging all together to promote collectively high ambition targets. Practically all national banking associations are creating working groups on this topic. We have a specific working group at the EBF engaging with the European authorities. So banks are participating of this collective goal. No? And finally, I think banks, European banks, a few of them, we have a clear strategy of how to unlock those trillions. No? And that's the case of our case on BBVA. We are a Spanish bank based in Madrid. We are present in 32 countries with 130,000 employees. And we announced a strategy on climate change and sustainable development our Pledge 2025, based on 3 principles, on 3 pillars: to finance, to manage, and to engage. So first, to finance, we decided to commit the capital mobilization of 100 billion for the next 8 years, 70% on green finance, also in infrastructure and microfinance and financial inclusion. In this pillar, we also are playing a key role on bonds issuance, so banks are more attractive today also for investors. So we issued the greatest green bond in the Eurozone, 1 billion just a few months ago. Then the second commitment, the second pillar is to align our activity to Paris Agreement, progressively align, and this means to have specific sector norms, but especially to see how we can align our credit portfolios to Paris Agreement. And we are going to participate on the initiative that was announced a few weeks ago by 2DI initiative and also by ING, and we are going to join also this project with this thing. It's a good methodology to make it. And finally, the third pillar is to engage, because we are totally convinced that we alone we cannot do a lot. So we have to engage with all our stakeholders, with our clients, with our retail customers as well, with our investors, with employees, with supervisors, regulators, with our peers as well. So this is the way we think. We have to have a huge challenge in front of us to unlock these trillions. We have to think big, and that's the reason why now we are on the inflection point on that.
Fantastic. Thinking big. I mean, I'd be interesting maybe come back later about your alignment and about this 1.5, but that's very good. Finally, Emil, at the end, we've talked a lot, and I don't know how many of you are actively working in the financial sector, but it might seem quite technocratic here, quite sort of big institutions and so on. But I think all of us, all of the panelists, have talked about actually reaching ordinary people. The institutional investors, I think Teresa was talking about, and in the end, the beneficiaries are ordinary people, ordinary savers, ordinary pensioners, and so on. And I think, Pierre, you raised that about personal finance and what you've been talking about. And your initiative is relatively new, but I think it's particularly directed, actually, is how to connect with that sort of the mass market. Is that right?
Yeah, first of all, thank you so much. I think that's an excellent cue, Nick. So I'm representing a company called Matter from Copenhagen with a sprawling fintech environment. And we have been part of the Climate-KIC accelerator program as well. We work with pensions and sustainability, and we do that because that's where all the money is. But before I talk about what Matter is, I would like to just ask out, how many of you in here currently own or have tried owning a share or a bond as private investors? Just a rough raise of hands. Yeah, and of course, as expected, we have an overrepresentation in the room compared to the average population. But if I ask the same question in a Danish crowd, approximately 5-6% of the people would raise their hands. So very few of us are what you would call self-driven or private investors. But then if I ask how many of you have a pension savings, could I try to see a raise of hands again? Yes, and that's the point. So what we are trying to do is really connect people to their pensions. So we're a fintech company that, in collaboration with pension companies, engage in a partnership where we help create a sustainable pension fund, a savings fund, and an engaging front end or an app where people can track the impact that their money is having. And if you look at the average Danish pension saver and look at how much money each of them have invested in potential CO2 emissions via the fossil fuel deposits that are in all of the pension portfolios, it's the same amount of CO2 emissions that you would get from burning off all the fuel in a huge tanker truck. So like, if we really imagine how much that is, that's a tanker truck for each of you in here. It's a lot. So, of course, this is about unlocking trillions, and our approach to it is really about divestment and exclusions, but also inclusions in big listed companies, so a classic pension portfolio with bonds, some alternatives, some real estate, and of course, a lot of stocks. And I think you've everyone been loaded with a lot of facts today, but I have one more final sort of quantitative fact that I just want to come across with is 40 to 50% of all the stocks in the world are owned by retirement funds or pension savings in some way or another. So if we look at this world that we're trying to change together and the trillions that we need to unlock, the systems we want to change, and I really applaud all the initiatives that you guys are already mentioning, we also have to look at us as foot soldiers or the initiatives that are coming bottom up, because it's our money. And so the way what we do to try to create an alternative is really help people, individual pension savers, connect back to their money. So by investing in a pension savings with us and our partner, they can go in on an app and actually see what is the concrete difference of making this choice compared to an average pension saving in Denmark. And this is not to sort of product place my company. There will hopefully very quickly be a lot of other alternatives out there doing something along the same lines. But I think this is one of the places to look for transformation and for unlocking is also the bottom-up initiatives. After all four of you, as you also are saying, Teresa, you need the demand from the market. You need people to actually show up. And the last 10 years, the way that has been done is by people showing up at pension funds and voting at the General Assembly. And the pension funds have said, yeah, but we can't change our investment strategy. So hopefully by sort of a bottom-up approach with more innovation from the entrepreneurial space, fueled by more technological and hopefully regulatory possibilities, we could see an emergence of companies that are offering alternatives and that would allow each of us to vote with our feet. So that's really what we represent. And then as a final note, we're also trying to do that with asset managers, the same practice, help them connect with what's in their portfolios.
Available in Denmark at the moment, or?
So the B2C product is, sadly, so this is just a big tease because it's not an international investment platform yet. But we also, as I said, we have a software as a solution for asset managers that want to get a quick, instant overview of harmful assets in the portfolio, companies that are flagged for exclusion from a range of NGOs and responsible investors around the world, etc. So yeah, that's the way we try to get beyond Denmark right now.
Brilliant. Well, I think that gave, I won't ask you how many employees you have to compare with Tony at BBVA, but I think we have, it was a good range of perspectives. We're going to be coming to you in a little while. I think that was helpful in realizing that finance isn't this sort of distant, strange thing, but it's something we all engage in. And I think the power of this network at Climate-KIC is maybe to think about how your innovations can connect to some of the things people we're hearing on the platform. I do now want to turn to innovation and particularly draw out maybe sort of two themes. Finance is actually very heavily regulated. So very heavily regulated, necessarily so. Sometimes the regulations haven't been the best designed. And now, as well as ministers like Minister Boujnah on the climate change side, we have central bank governors, Mark Carney and others, who are getting involved in changing the rules of the game. So I'd like to maybe pull out from you some of those sort of policy or market regulations, policy or regulatory innovations that we will need to see to unlock the trillions, and then maybe turn to some of the marketplace regulation innovations. So in terms of sort of regulatory innovation, I know Pierre Rousseau, that's something which is close to your heart, and Teresa, all of you probably regulated institutions will have something to say on this. But Pierre, kick us off, sort of how are we going to need to innovate in this in terms of the regulations for finance?
As I mentioned before, we talk about securitization, for instance, and we talk about some derivatives, etc. So I do believe that those products has been very controlled by many regulators, and I think it's something that we need to reconsider today. Depending, they're putting in place the frame that is done for good purpose, and so we need probably to think a little bit not in terms of products, but in terms of solution, because everything has been regulated by product, and the bank has been organized by product. And I think maybe we need to start, sustainability is more close probably to solution than product. So we have probably to rethink a certain number of regulation. So that's one point I wanted to mention. The other point is I'm extremely amazed by what I see in China. And I do see in China a regulator which is extremely pragmatic. When they, for instance, they change the financing rate when they do finance the bank for green assets, for instance. So this is something that they have already implemented. They are also thinking about reviewing probably the use of risk-weighted asset. And we know that how sensitive is the risk-weighted asset in the finance industry, and especially in banking and for the regulator, because it's one of the main instruments of controlling the risk in the bank. But if we think a little bit about it, if we can reduce the risk-weighted asset for the green asset, for instance, like, for instance, Mahjong is thinking in China, it's not implemented, but is pushing for that, maybe it's not so straightforward and we need to go on a more complex vision of it. But it's a very interesting aspect, because there we will probably solve one problem, which is in finance to bring the short term and the long term. And this may be allowed to have more long-term investment, because better consider or better rated by the fact that if we believe it's sustainable, normally we should expect less default. So that's the kind of modification that probably we need to be thinking out of the box maybe a little bit more. And I do believe that the fact that we have now this UNEP initiative with the financial center, it's probably things that we can start to engage in each center with each regulator.
Right, very interesting. So just for you, there are two famous Mahjons in China on the environmental side. There's a pollution campaigner called Mahjong, and there's also Dr. Mahjong, who has been the leader on green finance at the People's Bank of China, and is creating waves, I think. Coming to you, the other Pierre Ducret, this talk about the role of central banks, is that something you'd see?
Yes, I think that, of course, we will need specific regulations, new regulations to accelerate the greening of the whole finance industry. But my opinion is that, and of course, many of us are wishing that we will be inspired by what the Chinese have already achieved in a top-down approach. Many of us, not all of us, because as you know, as soon as in our world, in our market economy, we talk about a top-down regulation about on how to incentivize or penalize some kind of financial activities, it creates a huge debate. But, in my opinion, in fact, the main reason to hope that we will have an acceleration coming from the regulator is the fact that it has already taken a room in the mainframe. I mean that in the current and daily dialogue between the regulators, the supervisors, and the financial institution, the climate issue is on the table. And it's going to increase in the coming years. And you know, if you ask how you can have a levy on the 25,000 banks in the world, 25,000, I think. I think that the main answer is central banks. Central banks in their supervising role, daily supervising role. If at any meeting there is a question about how they manage their climate risk, it will change everything in the channeling of the money. Even if you don't have, of course I wish that we go toward capital weight ratios, incentivizing everything. But even without that, it will change the way the banking industry is proceeding. Because we are a very, very heavy regulated industry.
And Teresa, from your side, more on the institutional capital side, are there regulatory innovations we're going to need?
Absolutely, and I might just quickly pick up on Emil's earlier point, because I love the idea of connecting individuals to their pensions, right? I think one of the challenges is actually we have to get past the trustees and the CIOs of those pension plans, and they do not want to lose your money, right? So anyhow, back to innovation. I would say, because I want to touch real quick, and I'm conscious of time, on market policy and financial markets regulation. financial markets regulation, we've talked about that a lot already. I think the reason it's important is it's important to understand if there's any barriers in the financial market regulation that's going to prevent the flow of capital into this sector. A quick example, insurers in Europe are subject to a regulation called Solvency II. If they are investing in funds that have more than 10% allocation to emerging markets, the capital charge is higher. So as a result, they won't really be encouraged to invest in emerging market infrastructure funds. So we need to make sure that financial regulation is aligned in order to continue to support the flow of capital. From a markets perspective, and I go back to some of my earlier comments, for us, it's all about the revenue model. And in Europe, in the wind and solar sector, we're moving away now from fixed fee and tariffs. It's a good thing because wind and solar don't need subsidy, etc., going forward. But what's happening now is you're now exposed to more electricity price volatility, more merchant exposure. I think the innovation that we're beginning to see, and I think we'll see more of it, is corporates buying the power directly. And actually, this has been a trend that we've seen in the US market for many years. Over 50% of all of the power purchase agreements in the US today are corporates buying the power directly from wind and solar. I think we need to see innovation in emerging markets and the model for public-private partnership collaboration, because there's higher risk in emerging markets. We know we need to address the climate challenges there, and there's a role for public sector finance to play in order to encourage private capital to flow, blended finance vehicles, etc. The final comment I would make, and it's probably not for the institutional investor market, but we need to see more money spent on R&D. I came across a really interesting statistic recently. Tech and pharma companies, they spend about 10% of their sales in R&D. If you compare that to utility companies, it's 0.1%. If we really want to finance this energy transition in a meaningful way, we need to have more money spent on R&D. It's probably not going to be the institutional investors that will finance it. It's a different pot of capital. But I think initiatives like Climate-KIC that is out there trying to encourage this innovation is going to be essential, and if we're going to tackle some of the ambitious targets that we have in the IPCC report.
Yeah, and let's just reflect on what Teresa was just saying. Many of us in the climate arena have been committed to increasing flows of capital to emerging and developing economies. The famous 100 billion a year in terms of climate finance by 2020. That's the target. But we now have actually well-intentioned but poorly designed regulations in the insurance sector, which is actually making it more difficult for European insurers who will have much of your money to invest in actually quite resilient and quite robust projects in developing countries. So actually this is again why this financial regulation is important. We have one goal here, more finance for climate action in developing countries. One rule here is making that more expensive, and we've got to bring those two together. So thanks, Teresa. Emil, in terms of just on this policy regulation piece, is that something of where you see it's needed as well as market?
Yeah, definitely. So from the perspective of a startup company, it's the financial industry is notoriously difficult to engage with for good reasons, of course. But I think if you look at our business model, which actually is a result of the regulatory environment in finance, we have created what you could call business model innovation, not out of desire, but out of need. So we are like a mix of a lead generating platform and a agent, insurance distributor working on behalf of a pension provider, etc. So it's a really complicated space to get into with new ideas. And I think what we are seeing in some of the, I know in the Netherlands and in Denmark, they're trying these sandbox initiatives in the financial supervisory agencies to try out what can we do together to test off new operating models, new legal structures for companies. And I think there's at least, the way it's implemented right now is not very effective, but I think it's a very good first step to try off new things. I think in other, and this is a bit more of on a bigger policy level, I think there's still quite some, we can win quite a lot by trying to level the playing field as well, which, for example, would be, how about rules requiring all issuers of savings products and insurances to disclose fully a series of climate-related impact measurements to their customers. And when I say customers, I mean us, not institutional clients, but single individuals. I mean, we've seen it with the GDPR in Europe that has swept across Europe. There are demands in GDPR that you can't just tell people this is our 20-page personal data policy. You have to communicate it in an intuitive and understandable way. And if you don't, you can get into trouble with the local data authorities or whichever agency is implementing a GDPR. How about we do the same thing with reporting on climate-related measurements to individual customers? How about telling all issuers of savings products and insurance products, for starters, just to start where a lot of the capital is coming from, you have to disclose this, and we'll give you 3 years to get it in order, and after that, the fines will come down. Because, of course, this is not perfect, so we'll have to find a proper way to do it. But this would help create, from a top-down perspective, the awareness that we need for people to move with their feet. And then, back to your question, Teresa, then I'm sure the CIOs of the pension funds will start to nod and say, hold on, well, now we want BlackRock's big, broad sustainability ETFs or index funds, because now we actually see the purpose or the value in actually doing this.
That's a great idea. I've got, it's already got an acronym in my head. It's the CPDR, the Climate Performance Disclosure Regulation. It was invented here in Dublin, and there are a few nodding of heads. We're going to come to you after you, Tony. I wanted to hear from you. Just, I mean, again, the role European Banking Federation, that is very close to policymakers and so on. Where would you see, we have a European action plan on sustainable finance, what would be the piece of policy innovation that we're going to need to unlock the trillions?
Well, the action plan from the European Commission was a great step. It has been a great step to promote sustainable finance, and we are engaging a lot with the technical expert group and with different authorities to try to see how we can implement that plan, that ambitious plan, on the better way, not only on the investment side, but also on the lending side, no? Which is critical for banks. I see innovations, or we see innovations, obviously, on the supervisors and central banks. Well, nobody could imagine just 1.5 years ago that we would have today a network of central banks and supervisors for greening the financial system, no? So, and it was announced in Paris last December. So, something is happening. So I think that's very relevant, no? But I would like to use this point to talk about regulation, to talk about self-regulation. Okay, I think there is also innovative initiatives on the self-regulation area, on banking side, on banks' activities. The main one is the principles for responsible banking, that 28 banks, together with UNEP-FI, have been working in the last 9 months. We plan to announce these principles on the next 26th of November in Paris, and it will be something similar to the PRI and the principles of sustainable insurance. So it was the missing piece for the sustainability of the financial system. And at the end of the day, it's a framework to help banks to align our activity to SDGs and to climate agreement in Paris, to measure better our impacts and manage our better our impacts, and to set targets, long-term targets, that could define the ambition where we can contribute the most. So we are totally convinced as an industry, these 28 banks, that we have to rethink how we do banking, to empower individuals and to connect and to create positive impact in people's lives. And this will be an initiative that will be open to the whole industry. So we expect to have a lot of banks signing these principles, committing to the journey to sustainability. And also we are open this possibility to endorse the principles by other key stakeholders, investors, civil society, academia, any stakeholder. The idea is that we think that this will be another key piece to build this financial system that we need. And we honestly think that this is a very innovative solution to have a more overarching approach to the role of banking in society. So that's the piece of advertising.
Thank you very much. It's now your turn. Over to you in the audience. There are some people with mics. I would urge you to say who you are, where you're from, and keep your question or comment short. I would really like to encourage you to think about how what you've heard today can be fed into the innovation machine that is Climate-KIC. So I can see one hand there, and over here in the middle at the back. One there, one there. No one is thinking on this side. Oh, at the front you are. No one is thinking at the back on this side. That's right. So there's a hand there. Is there a mic? Is there a mic? Is there a mic? There's a mic. It's coming. Thank you so much. That's great. Hi, Ines.
So I just wanted to thank the gentleman from Matter for picking up something that was discussed in yesterday's panel, which is that we need to move away from, I'm all in favor of avoiding greenwash, but we are moving sometimes towards more and more reporting and clarification and impacts on the green, clean end of things, and leaving everybody else kind of scot-free. So I think your idea of requiring quite rigorous reporting on climate impacts from all other types of financial instruments as well is very well made, and certainly rebounds from the discussion yesterday. And I think another thing I'd like to mention, we heard about the responsible investing principles, but also in 2015, we, along with other multilaterals, but also commercial banks, launched principles for mainstreaming climate in financial institutions. So not just banks, but any financial institution, and has quite high-level principles, but requires a lot of this, including reporting, including transparency, including accountability, including looking at risks. And I would just suggest that another thing that could be added to the list would be, why not just ask why your bank is not a member of that? Why, are they not committed to the 5 principles for mainstreaming climate? And if not, perhaps they should read the IPCC report.
Very good.
And my last point is just to say,
3.
It's not a question. I just would like to make a reference to SDG 5, with
SDG
all
5.
due respect to the organisers of the panel.
Fantastic. Could we build on that to have the question here? Thank you.
Donna Cooney and the Irish Environmental Network, and I'm also on the Coalition for Sustainable Development Goals as well. And I suppose on that note, I'd just like to ask if, when you're looking at financing, that it wouldn't be just a case, what you've said it's very promising, it sounds very positive, and what the Minister said before was also very positive, but I didn't think that even the Project 2040 itself was not climate costed and was not measured against climate indicators, and that everything that when it comes to financing, that it would be costed, that the true cost of financing, that you wouldn't just look at the profit, that you would look at what is the actual overall cost before you would give a financial cost, and that we talk about the carbon taxes and carbon cost, and I think that's essential, really, that we start redirecting away, that we start charging for carbon tax, and then we start, reducing the cost on the type of measures that do not harm our environment. We're really at a crisis now, and it's not. We really don't have time for more reports, more analysis, and more talking. I was at a meeting, a talk last night of the Irish Environmental Agency in the round room in the Mansion House, and we really are at climate breakdown. Mm-hmm. And if we don't do something now, there won't be. We can't eat money. We can't eat. You know what I mean? We need to survive as a race, and we need to work together on this. And I think what you said is very promising, but I'd like to see actions. Thank you.
Brilliant. Okay, we have time for 2 more over here. We have the gentleman in the second row and the lady behind. Thank you. No, over here. We only have time for 2 more questions. Thank you. Sorry.
Yes, my name is Irving Mincer. I'm with the University of Maryland School of Public Policy, and my question revolves around the remark made by Teresa about structural impediments to investment, particularly through the implementation of Solvency II and by extension Basel III. Could you say a little bit about what it might take for, or what the government of Ireland and Climate-KIC might do to help advance thinking about rethinking those regulations and their implementation in order to promote investment along these lines?
Fantastic. And the person behind you taking a swig of water?
Thank you. I'm Štěpánka Králíková and I'm speaking for the students now. And I want to just say thank you to Emil for his initiative. And I'm just wondering whether you are also cooperating or working with students on this issue, because I mean, I don't pay my pension fund now, but whether you also involve students. Thank you.
Thank you so much. I'm sorry that we can't take all the questions, but time is the one non-renewable resource and we're coming up against time. So I'd like to ask our panel to talk about those, lots of different questions. There's one directed, a couple of directed, I think, at you, Teresa, particularly on the structural impediments.
Absolutely. I would say this is where financial centres can play a really big role, because actually they can bring it all together. And I think part of what it is we need to do is bring it all together, understand what the impediments are, and actually go directly to the regulator and say, if you're very serious about supporting the energy transition, remove X, Y, or Z. So actually, quite simply, it's about bringing it all together. Financial centres can do that. And I think in terms of the comment, just real quick, in terms of students and the millennials and pension plans, I mean, these are the people who will be voting with their feet. And we're absolutely seeing, if BlackRock thinks about future-proofing our business, if we're not offering investment strategies that the millennials want, we will not be in business in X amount of years' time. And that's where the whole world of sustainable investing is really very topical, because people actually want to care, they care about the future. They don't want just money in the future. They want to make sure that they're living in a world that's worth living in. So I think orienting sort of our strategies to meet those needs is certainly something that we're very focused on.
Pierre, your thoughts?
Yeah, just to add to what said Teresa, I would say that we need of course we need sophisticated products, but we also need very simple products. We need a very simple product to address the mass market in general. And so I think that the idea of developing labels as simple as are the labels for food, for example, the eco labels in Europe, is very important and will be a crucial innovation in the near future.
Fantastic. Pierre Rousseau.
I want to take maybe the point on action and being in action. And I will just make first a reference to my role. You can see in my role there is a sustainable business. And we talk about, is the part in the bank when we are looking at finding solution between the different departments as a toolkit, because the question here about sustainability is not about product necessarily, but is about solution. And then you have to go transversally, and that's why I'm not a global head of something, but I'm being an advisor. I have the ability to go to different departments and to pick up resources in order to rethink about solution. And we call it here a positive banking in BNP Paribas. So it's a way that we are rethinking about a solution for our client, corporate, individual investors, because as a bank we are at the center. And we need to think by picking up toolkits and different toolkits from the different. Tomorrow we will see that the microfinance will be probably very interesting, that the way we can associate with the local banking, that we can after that probably put all this together by repackaging that and distributing that to long-term investors, etc. So you start to touch at every single pieces that you are in different silos. And one of the things we discussed about breaking the silos this morning externally, but we have also to break the silo internally in the company, because we have all different type of products, and moving products to solution is probably the way. When we talk about sustainability, we talk about strategy. When we talk about strategy, we talk about solution, not product. And this is where we have to change. And I'm encouraging, we have no time to discuss about all the type of solution existing here in this debate, but I'm encouraging the people, if they are interested, to see all the solutions. We have a booth there at BNP Paribas, where they can show you all the examples we have today of solutions already implemented. One of them, I will start to talk about it, is the one that we create with UNEP, which is called Sustainable Finance Facility. We did one transaction, which was the TLFF, and we like to call it collaborative financing, because it's a transaction where we put as a solution not only different players. In order to achieve environmental and social goals, we put in place a facility, a commercial facility, but also we put it together to make it blended finance, also a trust, a philanthropy facility that we align together. And on top of that, after that, we create a structure when we put a corporate to do the offtake of the goods. We put in place a structure which was a green bonds, and we guarantee part of the green bonds by using the guarantee of a multi-development bank. We have involved NGOs to do the measurement of the impact, because we have to do the impact, and we use another NGO because they own the land, which is WWF, and we guarantee that this land will be properly handled without deforestation, for instance. So you can start to put solutions in place. This kind of structure can be reused many, many times on many, many different places. It's just a question. The complexity on this one was to put all the actors together around the project. The rest is simple finance. And I do believe that, and again, it's not to provide a product, it was to provide a solution. And this is where I do believe we can make the change.
Fantastic. I like that collaborative innovation. Tony?
Yes. Well, regarding the principles, let's share that this initiative was initiated by under the umbrella of UNEP-FI. At UNEP-FI, we are 130 banks on the network, and we decided that we need a specific approach for banks, as there is also already a specific approach for investors, a specific approach for insurers. That was the discussion we had in the beginning with total support of the network, and that's the reason why we decided to have a specific principles for banking, for responsible banking. That was the decision at that moment. Having said that, the principles will be launched on the 26th of November, but we are going to open an open consultation process, because the formal signature of the principles will be in September next year in New York. So we are going to have 10 months that the principles will be open to the community, with an implementation guidance also published, and where we expect to have obviously a lot of different contributions from the community, from the banks community, but also from other key stakeholders community. So we will have opportunities to think how we can link everything and get greater visibility and greater impact.
And Emil, your closing thoughts.
So I'll try to address the questions quickly. So the first one about why don't we just ask our bank why they're not committed to climate change or combating climate change? I think one observation is oftentimes when you do, and I've tried doing that, I've tried asking several banks about sustainable investing options, and there is only one in Denmark that offers it. They often don't know. So the people you interact with, and I think this is an interesting thing in the financial industry, is that the people you meet and talk to will often, it could be a pension advisor, tell you, well, our pension fund is committed to sustainability. And then they don't know that they have a bunch of index funds with nuclear weapons producers, fossil fuel producers, the likes of that. So there's something we need to get through before we get to the proper conversation, and it's annoying that it has to be at the C-suite level before you get to that. Overall cost question, we had a long discussion yesterday in here about how to measure, report on climate-related impact measurements. And I think just the things that I learned yesterday is everyone still agrees it's very difficult. There's not one proper way of doing it. There are a lot of initiatives coming from the bottom, and I completely agree. We have to be more simplistic. We have to start saying, let's get out of fossil fuels, not by 2050, but by 2030 or 2040. And what does that mean every year? That means that all asset managers in the world have to start writing off the value of every single oil company in their portfolio by 5-6 percentage points. Are they doing that? No. So we should say, give us a product that doesn't have this subprime-like asset in it. I don't want to own it. Final thing regarding students, we do employ some students, and it's actually the beauty of our startup is we have no one who knows anything about pension in it, let alone only one or two economists. So we have engineers, we have people who are programming neural networks to scrape the exclusion lists of sustainable investing companies to help us understand what to invest in and what not to invest in. And I think this is what is happening in the entrepreneurial space, is that we're not talking about basis points. We're not talking about, at least not only about Sharpe ratios. We're talking about impact, we're talking about making change. And a lot of us are doing that more from the developers or engineers or anthropologists' point of view than the bankers. And I think that's what we also learn from working a lot with students. We don't have a product for students yet. Maybe we'll have one day.
Fantastic, fantastic. Well, I've learned a lot. I've been inspired. I think we sometimes think that we need market innovation and then regulatory innovation. I like this idea of collaborative innovation. And also what I gained out of this is we need intergenerational innovation. So thank you very much. Please join me in thanking the panel. Thank you.